Hello everybody, this is Patrick Cooke. I'm Oxford Business Group's Regional Editor for Asia. I'm very happy to be recording this episode of the Editors Podcast in Indonesia. It's July 2019. It's 3 months since President Jokowi was re-elected, 3 months out before his inauguration for his second term. So it's a fascinating time to be in the country. We're talking about Indonesia, a country that's blessed with an abundance of natural resources, including oil and gas, but an economy and a population that has grown rapidly over recent decades, with rising domestic energy demand and also a rising oil and gas trade deficit. So I can't think of anyone better to discuss the outlook for energy policy and the energy sector more generally during President Jokowi's second term in office than my guest today, which is Darmawan Prasodjo. He's the Deputy Chief of Staff in the Office of the President, who's responsible for oversight for energy and infrastructure, among many other things. Darmawan, thank you for joining me today.
Good morning.
Good morning. So let's get into it then. We'll start upstream and then we can wander into various other facets of the energy sector here. I'm looking at a kind of global context at first. So we're looking at the global economy and the global energy economy at the moment. We see tensions in the Persian Gulf. We see China, the world's biggest energy consumer, growing at its slowest pace since the early 1990s. So how are these global uncertainties perhaps influencing investor interest in the upstream segment in Indonesia? And also, to what extent does the vast size of Indonesia's domestic energy market offset any investor concerns about the potential for perhaps declining energy exports?
Well, if we see the balance of supply and demand of energy, especially oil right now, the demand of oil is roughly 1.3 until 1.4 million barrels a day. And the production of oil is roughly only 750,000 barrels a day. And then the development of massive infrastructure, especially connectivity to toll road. In the 5 years goal plan 2014-2019, our goal was to deliver 700 kilometers of toll road. We missed the goal, by the way. Instead, we delivered by the end of this year 2,000 kilometers of toll road. And then also in the 5 years goal plan 2014-2019, we tried to achieve 2,600 kilometers of national road. Instead, we delivered roughly 4,000 kilometers of national road. What does it mean? During the Lebaran, the Muslim holiday, from Jakarta to Semarang, before it was 12 hours. Now it's only 5.5 hours. So the connectivity itself is meaning that the many areas that previously isolated right now is open up for new economic activities also. That going to constitute the increasing demand of energy, especially for the transportation sectors. So the demand of oil in the future is going to grow up faster than we thought. And now it's roughly 4%. I see that in the next 3 or 4 years, the demand growth would be more than 6% because of this connectivity. For instance, for the toll road in Sumatra, it's entirely in different location from the national road over there, meaning the area that previously isolated right now open up for new investment. We're talking about mining, we're talking about plantation, we're talking about tourism. Then the demand is going to grow very fast. But each time we do exploration in Indonesia, we hope to find oil. But instead, we found gas. So if we aggregate all the potential of oil production for the next 10 years, it's not going to go up, it's going to go down. You can imagine when the increasing oil demand is roughly 5-6% in the span of 10 years, the oil demand is roughly 2.5 million barrels a day, and the production is going to go down at roughly only 500,000 barrels a day, meaning there will be some kind of import in amount of 2 million barrels a day in the next 10 years. That's going to be a challenge. So the challenge here is like how we're going to be able to increase production of energy, especially oil here. And then the other challenge is how we're going to be able to shift from mostly import-based energy to become domestic-based energy. Only for the last couple of weeks, President has been raising an issue that the net trade import is mostly coming from the oil import, energy import. We need to fix that challenge anyway. So that's why we need to design environment that is from bureaucratic-like process to become a business-like process. So investment is going to flow. At the end, it's going to increase production. But also, we need to come up with a strategy, a global strategy, how to shift from import-based to become domestic-based energy.
I'm going to go a little bit more into the bureaucracy that you mentioned and also some of the innovative perhaps solutions. But before I do, just one more question related to perhaps international interest in upstream assets. Now, we've seen the state oil and gas company Pertamina proactively seeking to acquire mature upstream assets in Indonesia, leading to some concerns perhaps about resource nationalisation. It's obviously it's a long-standing topic in Indonesia. So what impact is this having on international investment sentiment?
Well, one thing is this, the government under the leadership of President Jokowi understand that we need to come up with the environment that is conducive for investment. And in oil and gas, there is, we're talking about fiscal policy. And what is the spirit in designing good fiscal policy? Fairness. What is fair here? Fiscal policy governing three things. First is, if there is any investment, we need to ensure that there is somehow mechanism to get the investment back. How to get the costs, being recovered. And second is how to manage the risk. And third is how profit can be split in such a way that investment is going to be economically feasible. And we've been trying hard exactly to design such a fiscal policy. And for instance, we understand that, being fair in designing fiscal policy is kind of elusive here. When oil price is going down, suddenly the investment is not economically feasible. But when increasing oil price, suddenly the windfall profit is not coming to the government but coming to the investors. But how are we going to manage that one? And how about the increasing costs? When geology, there is some kind of risk associated with the geology. Cost might increase and cost might be decrease and that kind of thing. So we're trying to come up with a good design fiscal policy, and also we're trying to streamlining the process. That's why early 2 years ago, the government actually, the Pak Yunan launching and Pak Archandra launching a growth split fiscal policy.
Growth split fiscal
policy. And at that time, of course, there was some kind of a misunderstanding, some kind of challenge on that one. But along the way of process, and I think the ministry is able to come up with some kind of a balanced fiscal policy, somehow able to communicate that we're trying to maintain also the rate of return of the investment. And then in the same time, streamlining the process that, because of using this growth split, then the bureaucratic process can be cut down a bit, etc., etc. But in the same time, is maintaining the good rate of return is kind of very difficult when oil price is going up. Then of course the economic feasibility is very well maintained when oil price is going down. At certain point, the operation has to stop and the investment is not going to be interesting anymore. And then also the cost itself has to be very well managed, etc., etc. And I think in the process, a lot of blocks here has been revived because of that kind of policy. Investment start flowing. For instance, it's like Masela here. For the last, the plan of development is underway. And the head of agreement has been signed between the ministry and also the impacts, etc., etc. And then the investment is going to start flowing roughly between $18.5 billion to $19.8 billion.
Certainly an interesting topic that we'll be watching very closely as we continue our coverage on Oxford Business Group, on Indonesia for Oxford Business Group. I just want to move along a little bit to talk more about the energy generation and energy demand here in Indonesia. As you mentioned, it's a big country, over 250 million people, the fourth biggest population in the world. It's a G20 country. It's the biggest economy in Southeast Asia. So energy demand is rising, year on year. And obviously you wear another hat, which is as a commissioner for the state electricity company here as well, PLN. So, we talked even before we started recording about President Jokowi's ambitious target in his first term to add 35,000 megawatts to generation capacity here. Didn't quite meet that objective within his first term, but there's still a lot of projects in the pipeline and medium-term targets that are very reachable. One of the frequent complaints that we hear when we meet with investors in Indonesia or looking at Indonesia is the sort of regulatory uncertainty, changes to regulations that are then changed again, long bureaucratic processes, particularly in land acquisition when it comes to power plants. So obviously President Jokowi now has a fresh mandate. He doesn't have to worry about re-election again. So how do you assess the potential for improvements in the regulatory environment and the business climate to attract private investment in generation, transmission and distribution?
Well, there are a couple of things. From the 35 gigawatt, actually 25 gigawatt is coming from the independent power producer. Meaning that we understand that the investment in the power capacity generation is very important here to maintain balancing between the supply and demand. Only 10 gigawatt is coming from the development coming from the PLN itself. And we also understand here that as I mentioned before, the development of massive infrastructure here open up a new growth, hence also increasing demand. And for instance, it's like during the development of the toll road in Java, from Jakarta to Cirebon here, before it was like 10 hours, right now it's only 3 hours, 3.5 hours, and the development of the new airport Kertajati, and then the development of the new port of Patimban here, and also connecting between the airport to the Bandung city and also etc. Meaning that this is an area that going to be a prime location for the new investment for the industrialization in Java. Before it was only located near Jakarta because of the Tanjung Priok and then also the Soekarno-Hatta airport. Now it's like there are new areas that are good for investment. Hence, the demand of electricity is going to increase substantially. It's not going to be right away after the development of the infrastructure. There is a direct impact of the demand of electricity that it needs sometimes. But we increase the demand of electricity, the trend is going up. And in that regard, we need to balance between the supply and the demand. Yeah. And 35 gigawatt is going to face the problem. But of course, time and then the process itself is very important. And in that regard, we admit that 35 gigawatt before it was planned only in the span of 5 years. Now we understand we need to balance between the supply and demand, so some of the project is being postponed a bit. Yeah. So that the balance is going to be there. And we see that the climate for the investment is getting better. Before, early in the game, and we face a lot of bureaucratic challenge, of course. But along the process, we identify, the challenge one by one, and we transform this bureaucratic-like process to become business-like process. For instance, on the geothermal, we understand the development additional of geothermal in the past has been a little bit slow. We're trying to accelerate a bit by providing environment conducive for investment in the geothermal. In the past, we understand the geothermal auction is going to take place early in the game, and then the auction taking place, and then of course the lowest cost is going to win. And then we also understand that geothermal is we talking about the reservoir, and there are a lot of uncertainty. And then, for instance, we expected there's going to be 200 megawatt, and then along the progress, and we realize, it's not 200 megawatt, it's only 40 or 30 megawatt, meaning the cost is going to increase a lot. And then during the auction, the price has been locked at a low cost, and then the project becoming not economically feasible. And we start fixing the problem by coming up with regulation somehow, depending on the size of the geothermal, and then the price is going to be corrected, and ensuring that the economic feasibility of such a project. So we face a lot of challenge here, but also we identify the challenge one by one and trying to come up with somehow streamlining the process so it's becoming very simple. And then from the investment point of view, and we also trying to maintain the economic feasibility of each project. And the reason is this, and the only way to move forward is to ensure that the collaboration between the government and the investment is going to take place in such a fair manner.
And you mentioned geothermal. I mean, I think it segues nicely into maybe a discussion on renewables in the energy mix here in Indonesia. Indonesia is committed to the ASEAN target of 23% of its energy mix being comprised of renewables by 2025. I think at the moment it's around 13-14%. So there's still some way to go, and there's this inherent tension really in Indonesia between coal, which is perceived as relatively accessible and cheap, and renewables, which is still in some, perhaps seen as a more abstract concept to some people. So how do you see the coal renewable debate playing out over the next 5 years, and how realistic is this target of 23% of the energy mix from renewables by 2025?
Well, if you see, comparatively speaking with China, in 2001, 2002, the energy mix in China was 46% coming from coal. And then if you look back energy mix of China in 2009, we see that coal is roughly constitute 86%. So we see that in China from 2001 to 2009, they coming up with somehow emphasizing on crude. So that's why they're resorting to the cheapest of energy coming from coal. Indonesia is totally different. And coal right now is like, at the end, 10 years from now, the energy mix coming from coal is roughly 50%. If you see the 5 years master plan, electric supply master plan, last year, the previous year, the additional coming from renewable energy is roughly, in the 10 years master plan, the electric supply coming from the renewable energy roughly 14.9 gigawatt. And then this year, it's been corrected. Instead of 14.9, the additional is 16.7.
Okay.
Meaning there's additional
1.8
gigawatt of additional capacity coming from renewable energy. It shows a strong commitment of the government to the renewable energy. And from that 23% in 2025, roughly 10 is coming from the hydro power, and then like the 11 point something is coming from geothermal and others. And in that regard, is from the geothermal, for example, we're trying to identify what are the challenges. Of course, the cost, we fix the problem. And then there is a new technology that instead of aggregate the whole things into 50 or 100 megawatt, and then going to take more time, and when there is some kind of finding in the wellhead, we come up with a very small incremental process, meaning the process is going to be much quicker, and then from the financial point of view, it's going to be much more feasible. And so, of course, we need to change the master plan a bit, but we accommodate the progress of technology, the progress of dynamic in the ground, so the additional capacity of geothermal is going to be much faster.
Okay, great. And Darmawan, I want to go back to something we talked about at the start. You were talking about demand for fuel in Indonesia, sort of outstripping supply. And you're known as something of an innovator in the energy sphere. And we've seen, Indonesia, I'll let you talk more about it, but, concepts coming out of Indonesia about biofuels using palm oil, for example, and obviously, making the most of what you have here. So perhaps can you talk about some potential smart, innovative solutions that Indonesia could use from its domestic resources to meet this rising demand?
And as of today, there is a presidential regulation design, proposed presidential regulations about the electric vehicle based on the battery, meaning the electric vehicle is going to get some kind of a massive incentive to ensure the economic, comparatively speaking, compared to the gasoline and diesel fuel-based cars. And in that regard, this presidential regulations is actually incentivize the use of electric vehicles. And that is very interesting because 1 liter of gasoline or 1 liter of diesel fuel, comparatively speaking, is the same energy of 2.2 kilowatt hour of electricity. And 1 liter of gasoline consists of, if we using the combustion engine, is emit roughly 2,600 gram of CO2, 2.6 kilogram of CO2. If we use, instead of electricity coming from coal, roughly 1,000 gram per kilowatt hour, 1,000 gram of CO2 per kilowatt hour, so 2.2 kilowatt hour is roughly 2.2 kilogram of CO2. So even when we shift from gasoline-based or diesel-based engine to become electricity-based engine, and we use coal-based electricity, it's already a reduction of 15% of CO2 emission. And if we use, of course, coming from natural gas, it's roughly 650 gram of CO2 emission per kilowatt hour. The reduction could be more than 40%. And then also we know that the electricity is mostly coming from coal, renewable energy, hydro, etc., meaning we already shift from foreign-based energy to become domestic energy using these electric vehicles. And in addition is this, the import of crude and product, ranging is between 15 billion US dollars to 20 billion US dollars annually. When we understand that our GDP is roughly 1 trillion US dollars, that's the reduction of economic growth of roughly 1.8 until 2%. So if we solve the import of energy right away, our economic growth is not 5.1%, but roughly 6.5 until 7%. And as I explained to you before, the gap between the demand and the supply of oil is going to get widened along the progress of time, because demand increasing, the production is going down. We need to fix this problem. Of course, one of the things is using the biodiesel, because crude palm oil is abundant in Indonesia. But also, if we only depend on that one, when crude palm oil price is 550, then the economic feasibility between biodiesel and diesel fuel is going to be roughly equal. But when the crude palm oil is going up to $800 or $900 per ton, then biodiesel is becoming relatively more expensive. So shifting from diesel-based fuel or gasoline-based fuel transportation to electric-based fuel transportation is going to be a very good strategy here.
Okay, excellent. Very interesting indeed. Well, we're almost out of time for today's podcast, so maybe you can just finish by summarizing briefly how you see energy policy evolving under President Jokowi in his second term. Are we likely to see a continuation of the things that his administration was doing in the first term, or are we likely to see any radical departures from what came before?
Well, President Jokowi treats energy not only as a commodity, but energy is more on the drive of economic growth. And we see that the correction action in the electricity sector, that before a lot of deficit in the electricity supply has been corrected right now. The supply is balancing between the supply and demand has been running very well, meaning that all the areas in Indonesia right now is open up for investment because of the deficit of electricity has been solved so far. We also anticipate not only for today, but we anticipate for the new expedited growth, meaning the demand of energy is going to go up. In that regard, the master plan for the electricity supply has been accommodating that potential growth in the future. So the supply and balance between the supply and demand of the electricity, I think, has been very well managed. In the oil itself, is a little bit challenging because the gap between the demand and supply itself is very wide, it's getting wider. So here again, we come up with a big strategy shifting from foreign-based energy to become domestic-based energy using biodiesel and also the electric vehicle. And then also we trying to streamline the investment, conducive environment for investment. So we trying to change from bureaucratic-like process to business-like process so that the industry is going to flourish. And the only way to build our national capacity is not through nationalisation, but through international collaboration that in turn is going to build our national capacity. by joint collaboration, joint operation, and through more investment coming to the country. Yes.
Oh, that's very welcoming to hear. Well, thank you, Darmawan Prasodjo, for taking part in the Oxford Business Group Editors podcast. It's been a real pleasure and very interesting. And thank you for listening.